Good morning, one and all, and welcome to this morning's video. So I haven't made a video for a few days because I have been kind of lagging behind with my work. I got back off of holiday late Saturday night, and I seem to have been playing catch up with a lot of my work. As a consequence, I haven't been going to bed until quite late, or getting to sleep until quite late, and then I've been waking up late, and then running behind with my schedule. So I've pretty much caught up with things now. So I should be able to make videos on a regular basis, but I think that highlights the importance of momentum. Even though I was on holiday, I was setting my goals every day, but I was trying to scale back a little bit so that I could spend more time with my family. But obviously, that has a knock-on effect when you have as many projects and as much to do each day as I do. You end up playing catch up. But anyway, without further ado, Kiwi Swiss on the higher time frames. If I just zoom out, so on the higher time frames, you can see that we have this low here, which according to my data was an all-time low. So we broke above the all-time low. People think this is just going to keep going, and then what we see in the majority of cases is a sharp recovery there. Okay, you can see that we broke below that in a couple of days, and then it literally only took a couple of days to retrace. What was the move there? Let's have a look. A 200 pip move, okay? So you can see the euphoria kicking in there, people getting caught the wrong side of the market, as they usually do, and then we see the impulse correction continuations to the upside. So at this moment in time, given that this was a complete and utter washout, there is no need for price to come back down to this area because it's washed out all of that liquidity. Of course, anything can happen at any time, and if something changes, then we'll assess the situation as we see it. But what you can see now as well, so if price has no business coming back down here, what is it likely doing? Well, it's likely forming some kind of correction for an impulse correction continuation to push higher, okay? So where is it likely gravitating back towards? Well, you can see, if you look where we are, you can see it's gravitating back towards here by the looks of it, okay? So that will be likely where the liquidity is that needs to be tapped into for price to be able to then continue on its merry way, to coin a phrase. So you can see that yesterday we had this indecision candle. Why was there indecision? Probably because people were trying to buy this whilst the orders there that are down there were dragging price down. And if we just look at this, you can see evidence of a reversal structure. You can see even on the 4 hour, you can see this 1, 2, 3. You can see the middle section, which is slightly clearer on the 1 hour chart. Here, 1, 2, 3. Okay, that breaks below there, but doesn't tap into the area of value where there was a sharp move. Okay, this you can see appears to be coming down to tap into that area. Yes, there's a bit of consolidation here. That is a factor in. This is a factor in terms of how I take my entry. Okay, because we do have that sat below. That is kind of the last line in the sand which price could theoretically gravitate towards at this moment in time if it's going to move to the upside, because we kind of have this here, this expansion where we tap into there, so the price has no business coming down to there, but you can see we left a bit of a gap to here, so in theory we could come down to there before moving to the upside. But the reversal structure, which is sat just above here, is indicating that this is where we will likely respond from. Okay, so just breaking this down on the fly. Euro Kiwi is actually pretty much a carbon copy of this, but in reverse, which kind of adds fuel to the theory that if Kiwi Swiss is going long, then Euro Kiwi is going short, i.e. Kiwi strength. So what I'm going to be looking for today from this pair, nice and simply, is a tap into the area of value, followed by a push up above the area of interest. Okay, and then I would be looking for a 15-minute continuation as a minimum, because we have this sat below these two sharp moves, which were the start of this structure here. Okay, so I wait for slightly more deliberacy when that's the case, but then we would likely by that point have washed out enough liquidity for this to move to the upside, and then I would look to get long on the break or within the correction, and we would have 3.5% to the high depending on the size of the stop loss, about 3.8 to there, and then to there to the start of this move we would have about 8.5%. And if we measured the range that we were trading within, and we do it crudely, you can see that we have a sharp move sat just above Try that again, because now all the alerts are going off. So we have that structured there. We break out of that. Price comes up, leaves a footprint, which is almost the retest of that. So that might be where we get some kind of reaction, especially as it's sharp. So I would set my take profit at the 90% area of this range, which falls just shy of that sharp put point that we could respond to. And then that would give us something in the region of, what's that, 7.5%. Okay, so that is Kiwi Swiss. Not one I trade all that often. In fact, I don't place many trades that often at all anyway, because my entries just haven't shaped up these past few, well, for quite a long time, actually, about a year and a half, but it is what it is. I'm not bothered about that. All I'm interested in is doing what I've been taught to do. And if it shapes up, great. If it doesn't, it's all good. So Euro Kiwi, pretty much the same in reverse. So you can see on the higher time frames, we have a break above here. Not quite as much of a washout. That is partly why it's second on the list, but we did break above significantly. We have this kind of, we have this move down here, the impulse correction continuations. You can see that we have a little bit of consolidation there, okay, and that price tried to sell off and it's coming back up. Why is it coming back up? Okay, it's likely coming back up because maybe we're retesting. If we just look at this, we may need to retest the back end of that. That's a possibility. That maybe that's why price is coming back up. But you can also see that we have a gap there to that low. Okay, I am mindful of the fact that just as with Kiwi Swiss, you might be thinking, well, this looks like an impulse correction continuation to push higher. The reason I'm not bothered about that is because what have we actually responded to from the left? If this is an impulse correction continuation to push higher, what has it responded from? What liquidity did it grab for it to be able to do that? It didn't tap into anything. It near missed it. And we've already washed out all of this liquidity. So why are we coming back up? Okay, to me, this just looks like a retest of, we have this structure here that tapped into that area. And yesterday I was looking for continuations here, didn't get it. And there was a clue. So I was looking for, once we had this, we had the 1, 2, 3, with some degree of a middle section there. And I was looking for corrections within here, take this short. But as soon as we got this sharp move and then we dropped off, immediately that looks like a middle section to me, another middle section to push back up to tap into the high that we initially tapped into, especially as there's a little bit of consolidation sat above. Okay, and considering as well, we haven't really, if you actually just extend this out, we kind of tapped into that but didn't break above, so maybe there's still stop loss orders placed above. So this looks a bit to me like a bit of a slightly different to Kiwi Swiss. This looks more like a bit of a scoop double top after the 1, 2, 3 for then the drop, especially as we have a near miss to here and a near miss to here. So in this instance, what I'll be looking for is exactly the same thing, but in reverse, that I was looking for on Kiwi Swiss. A tap into there, followed by a push down and a 15-minute continuation. Okay. And then I'll be able to manage it down to here, something in the region of 4.8. Okay. And then I would target, what I would do is target this low here for something in the region of 15. Again, just because the profit potential looks greater on this one, I'm not interested in that. All I'm interested in is which trade is more likely to allow me to get my risk off of the table. That's all I'm interested in. So what I would do is measure that mechanically, and then I would set the take profit once again at the 90% area, which would be something in the region of 14%. That's what I'm going to be looking for today, folks. If it shapes up, great. If it doesn't, I couldn't give a monkey's backside. Okay. And that's how you avoid silly FOMO trades, having that kind of mentality. Anyway, that is what I'm going to be looking for today, folks. As I said, I should be back with more videos now that I'm kind of back in the loop with my schedule and caught up with a few things. But have a great rest of your day. Have a very great, enjoyable and productive weekend. And I'll see you again in the next video. Adios, amigos.